Ladies and gentlemen, good day and welcome to the Q3 FY2025 earnings conference call of Cartrade Tech Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not guarantees of the future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vinay Sanghi, the Chairman and Founder of Cartrade Tech Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everybody, and welcome to the Q3 earnings call. It's been a really strong quarter for the company, and in the next few minutes, I'll try and run you through some of the key highlights. We have circulated a presentation in advance. If you look at slide 3, and the first part of the presentation is, of course, as you know, we've had record-breaking revenue and profits. Our quarter 3 revenues stood at a record 193 crores, and the profit after tax at 46 crores. We've had exceptional growth from all 3 business verticals, and all our verticals have delivered the highest ever revenues and profits and margins. For the 9 months of the year, revenue surged by 32%, EBITDA grew by 100%, and profit after tax zoomed to 99 crores. Our Q3 versus the Q2, which is consecutive quarters, the profits rose sharply by 48%. What's driving this growth? A consumer group, which is Carwale and Bikewale, revenue increased 38% year on year, resulting in a profit after tax growth of 172%. We achieved a 35% margin in this quarter in our consumer group business, which is now getting to be a benchmark of excellence in the industry. Our remarketing business, which has been where growth has been a challenge in the last few quarters, has delivered a 28% growth in revenue in the quarter and also has 178% profit after tax growth. And OLX, where on a quarter-by-quarter basis, we've seen continuous growth, we have had an 80% surge in our profits. In OLX, you remember, from the date of us acquiring it last year, we've always had a growth quarter, which every consecutive quarter has done better than the previous. So there's a lot of work to be done there, but we obviously feel very optimistic about OLX India's future. If we look at slide 4, it talks about our first 3 quarters of the year. As you can see, from the first quarter to the third quarter, we've had a 23% growth in revenue within the same year. The EBITDA has grown 132% from 21.58 crores in the first quarter to 50 crores in quarter 3, which would mean a 132% rise in EBITDA within 2 quarters. Overall margins have increased 28% on a consolidated basis for EBITDA. Profit after tax from 22.90 crores, 22 crores 90 lakhs in quarter 1 has gone to 45.53 crores in quarter 3. So it's shown not only strong Y-on-Y growth, but our business has shown strong Q-on-Q growth in revenues, EBITDA, and profitability. If you look at the next slide, slide 5, we are continuing to be the number 1 automotive platform in the country, the number 1 used classified platform in the country, the number 1 vehicle auction platform in the country. If you look at traffic, we've achieved 79 million monthly active unique visitors across all our 3 platforms. As we have shared earlier, we have 3 platforms, Carwale, Bikewale, and OLX India, which get more than 150 million customers per year, which is more than 10% of India's population, comes to 3 different platforms within our group, which is a very, very strong, which gives you a very strong sense of the brands Carwale, Bikewale, and OLX. 95% of these users come organically, which means we don't pay for the traffic, and that reflects in our strong EBITDA and profit margins. We are now out of 450 plus physical locations for our Shriram Automall outlets, Abshore outlets, as well as OLX India outlets. Auction volume went up, and we are auctioning at the rate of 1.5 million vehicles a year now. As I've already covered, revenues is 193 crores. Adjusted EBITDA, which is takes into account ESOPs as well as our interest income is up 70.2 crores, which is almost like a cash proxy for us. Profit after tax that we've disclosed is 45.5 crores, and our cash balance has increased to 885 crores. If you could look at slide 6, which is a consolidated results, the revenues grown 27% year on year to 193 crores, 32% growth for 9 months at 521 crores. EBITDA surged 98% for the quarter at 50 crores and 104 crores for the 9 months, which is at 100% growth. As I've again said, EBITDA margins are 28% versus last year 18% in the same quarter, which is up 10 basis points. Which is almost 10 basis points in the quarter to last year compared to last year. Profit stands at 46 crores versus the loss the previous year, and 99 crores for 9 months versus, of course, a small loss in the previous year. If you look at slide 7, which is our standalone results, you see highest ever revenues, of course, on the standalone accounts, 38% growth in revenue for the 3 months, 27% growth in revenue for 9 months, which of course has led to a massive growth in profitability, 237% growth in EBITDA for the 3 months of the quarter in the consumer group business, 442% growth in EBITDA for the 9 months ended, which is at 42 crores EBITDA. PAT stands at 172 crores up in the standalone accounts, and PAT for 9 months stands at a growth of 70%. As I said, the 35% margin in our standalone business is now getting best in class. Many of you had asked over the last many quarters, will our margins ever get best in class? And at least one of our business is now getting there. Let me also highlight that even though the group margin is 28% and the consumer group is 35%, almost, in fact, all our businesses, the margins are more than or excessive of 20% now. If you look at slide 8, the remarketing business, which has had a few sluggish quarters, has come back to the growth trajectory. And again, here you can see the levers of the business working. We have 28% growth at 63.64 crores of revenue in the quarter, lead to a 73% growth in EBITDA and 178% growth in profits. So we believe that, something we've been talking through in the last few quarters, the repossession business is slightly has improved and is reflecting in the accounts for the quarter. If you look at slide 9, which is OLX, as I said earlier, OLX in every consecutive quarter has grown. From the time we've acquired the company, margins have grown, revenues have grown, and profits have grown every consecutive quarter. Revenues grown 16% at 52 crores, 51.97 crores. EBITDA is up 24% and PAT is up to 14.68 crores versus the loss of last year. But here again, the margins are up to 26% from 24% last year and 18% last quarter. The rest of the presentation covers segmental results, our Google Trend numbers and some of our organic traffic and auction listing numbers. So I want to stop here, and I'm happy to take some of the questions and answers from you. Let me again once highlight that it's been a strong quarter performance built on a strong fundamental business. We feel pretty good about the situation of the industry and the business itself. And yeah, I'm happy to take any question that you might have for me. Thank you.
Thank you, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vijit Jain from Citi. Please go ahead.
Yeah, hi, thank you. Hi, Vinay. Hi, Anisha. Congratulations on a comprehensively spectacular results here. So my first question on the consumer group business, if you can comment on the growth rate that you're now seeing in the business. I mean, this is a pretty decent acceleration, pretty sharp acceleration versus what you've seen in the last many quarters. So is this what we should expect in the near term ahead as well? And broadly, if you can talk about whether you think you've taken wallet share from competition across OEM ad budget wallet share and across major dealers ad budget wallet share. That's my first question.
Sure. Yeah, I think the one thing is that the industry's seen a very minor growth in the first 9 months.
Right.
As we've discussed many times, supply is higher than demand, and that
Okay.
makes it a little more favorable market condition for consumer group businesses, where OEMs and dealers depend a lot more on our platforms for sale of vehicles. So these are reasonably favorable market conditions at this point. And we've also seen a small growth in the industry, but supply is more than demand. So we've always highlighted that these are and this is normally the situation in most markets where supply is more than demand and there is some growth in the industry. So we expect that to continue in the next few quarters. I don't think we are seeing any real change in market conditions at all at this point. I think the industry growth rates are probably what they're going to be at this point. I think supply will exceed demand for the next few. So I think from an industry standpoint, we don't see much change. Clearly, car wale, bike wale have grown in terms of traffic, in terms of user experience, in terms of their deliverance to car manufacturers and dealers consistently, right? And if you see the traffic growth is also pretty significant. And therefore, we feel good about the business. Whether we've taken wallet share is too early to tell. My sense is that if you see the advertising numbers, generally we would have taken some share, but generally the spends have also gone up, which is also affecting or helping our business, right? It's a combination of wallet share as well as spends having gone up as well. But our traffic growth numbers are pretty sharp if you see as well.
Right. Yeah. Thanks, Vinay. Yeah. And on the remarketing business, I can see that there's a pretty solid, again, 30% odd growth in auctions listing volume. So most of the growth seems to have come from this side. I know in the opening remarks you mentioned repossession business
Yeah.
has slightly improved, but this looks a little bit more broad-based in that, or is that base effect in play here? Again, just looking at broader ecosystem, are you seeing repossession coming back just to normal, or is there more to it?
Yeah, we see repossession having definitely grown in the quarter, and it is a driver for us because about almost half our volume comes from repossession. It's about half now. It was about 42% at its lowest. It's back to 50%. So it's clearly growing. Whether it also seems likely these are not one quarter phenomenon, so it seems likely that it could be a trend for a while. But it's hard for us to predict beyond that. But generally seems that these volumes from here should sustain itself or grow from here. It seems like that.
Correct.
And it is a factor which is driving part of the growth.
Got it. My last question on the OLX business. So OLX business, since you've acquired, focus has been on, integration and reducing some of the costs, and those things were achieved earlier. I think this is the first quarter where we're seeing, a meaningful jump in the absolute revenues also collected. So if you can throw some color on, where growth is coming from more recently, and if I look at the number on a YOY basis, we are maybe at somewhere around 15% YOY versus the first full quarter after your acquisition. Do you see enough to believe that the growth should stay here or improve from here? Any colors on that would be helpful.
Yeah, you're right. I think the first year we spent a lot of time on stability of the platform, technology transition, stability of the team, putting our product teams together, technology teams together. A lot of those things what took the first year, I would say. A lot of the initiatives we've been running in the last 6 months on sales, product marketing, traffic, etc., are things we've had very little time to work on. Some of these things are in a small way starting to play out. In no way do we think they've played out. So it's still, to me, a lot of whatever the growth is coming from a lot of the early initiatives. There are a lot of long-term fundamental initiatives being taken, and we're hopeful that in the coming quarters, we'd ideally like this to grow a lot faster. So that's revenue metrics, profit metrics, all of it. The margins have got better. We have a better handle on margins, but we would like the revenues to grow stronger in the coming quarters and years for sure. We believe there's tremendous opportunity both on the used auto side at OLX and the used non-auto side at OLX. Both are almost going at the same rate. There's another question you had, almost at the same rate. But it's important to know that the potential in both is equally large. And we're just very early stages of of that of really catering to that potential which exists. It's very early days still.
Got it. I have just one last question, and I'll jump back into the queue. Is there a collaboration or a partnership that you have with, the likes of Cars24 or Spinny in the works? I think I saw something.
We continuously work with them. I think over a period of time, I mean, a lot of people confuse what our relationship with them is. Cars24 and Spinny are for like full stack companies which buy vehicles, refurbish them, and sell them to consumers. But they tend to be full stack. We tend to be very marketplace. We are completely a marketplace. In both Carvale and OLX, we tend to work with them pretty closely because they're companies which list vehicles on our platform, Carvale as well as OLX. So we tend to work very closely with them, and they actually complement our marketplace model and add value to our users as well. So yeah, we tend to work very closely with them actually.
Okay, got it. Thanks, Vinay. Those were my questions, and again, congratulations. Thank you.
Thank you.
Thank you. The next question is from the line of Sachin Dixit from JM Mutual Funds. Please go ahead.
Hi, Vinay. Hi, Nisha. Congrats on a great set of results. I had a couple of questions. The first one is regards to growth rate, right? So if I look at the growth rates in consumer business, they have spiked up very sharply. Obviously, some of it was driven by the fact that OEMs were not spending a lot earlier, and those spends have started to come back now. But do you see this 38% growth rate likely to sustain? I mean, I'm sure like next few years not, but even in the next quarter, do you believe such a growth rate can sustain?
We don't give guidance, Sachin, around revenue growth rate, but we do feel that market conditions are reasonable. And although October to December tends to be a little high, but a bit of a high in terms of a quarter for the consumer group always. I mean, generally we just feel comfortable the way the market is right now, and Carvale or Bikewale's positioning is. So we don't feel I don't want to comment on the growth rate, but we feel confident about the business.
Understood. And coming to OLX, right, obviously a lot of things are still in the works. At the time of IPO, when we discussed, there was some understanding that the business is likely a 20% odd growth business, which is where it had grown in the past. I think that growth rate should revert at some point. But what is happening on the cost side there? We noticed that there is a sharp drop in employee expense in this quarter. Is it just because of one single senior person leaving, or there is more to it?
Yeah, there is some cost realization because of that, absolutely on the employee side. But it takes us time because after M&A, it takes us time to balance tech costs, employee costs, organization charts. So we understand everything. And I think now we've reached to a very stable, we think a stable margin basis, right, where we can think the margins will only improve with revenues. And that's across. It's not just in OLX. It's also we've seen Shriram Automall as well as Carvale, where the nature of our company is almost that we want to grow, but we want to keep our unit economics growing with it, right? And we want leverage in our business. And I think OLX is no different, where with increase in revenue, we have very marginal increase in costs. It's typically demonstrated in the consumer group, and you can see it now play over the last few quarters. You can see it in SAMIL in a quarter which has grown. And OLX is no different, where we want to see margins growing with and minimal. I mean, the way we're trying to structure the company, OLX or any of the others, is that revenue should grow as we increase our value to our consumers or dealers or all listers in OLX's case. But not necessarily that we have to increase costs in relation to that. A large part of revenue for OLX is an online collection method. It's paid online. So it doesn't mean that manpower or other costs go up with revenues. And I think that's the methodology we've used for all our businesses. And that's the architecture of how we build products in these companies. So it's playing out now, as you can see, the first signs in the last quarter for OLX or the other businesses. But that's the nature that we worked on for the last 3 years or 4 years or 5 years to get this basic DNA of this leverage of revenue growth, not increasing costs, and not increasing costs.
Completely fair enough. Just one final question on the remarketing side. Basically, we do not notice that there was any sharp jump in NPAs for some of the vehicle financials. So the growth rate that we got, even on sequential basis, is it a function of our investments into retail, or repossessions have finally bottomed out for good?
No, I definitely think the growth is coming from repossession. Of course, our numbers compared to the industry are much smaller. So even though the industry may not be showing it, repossession has definitely been a factor in the growth of Shriram Automall. Other segments have grown too, but repossession has definitely grown as well. I'm not sure. I'm not analyzing the numbers of various banks and NBFCs to know NPA is going up or not, but definitely here we find that repossession is contributing.
Sounds good. Thanks so much, and all the
Thank you.
best.
Thanks.
Thank you. The next question is from the line of Siddhartha Bera from Nomura. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity and congrats on
Hi.
the set of numbers again.
Thank you.
Sir, first on the consumer business, if you just can share the mix for the quarter between old and new and used and
Anisha, you want to take that up quickly? Just share the various metrics of the consumer group. Okay.
Sure.
The breakup.
It's pretty similar to what we've declared in the past. The used versus new continues to be that 85 to 15 or 86 to 14. The dealer OEM also mixes pretty similar, this 535. Any other ratio that you would like to know?
Okay. So the growth basically is coming across both OE and dealers. There is no specific segment which is growing faster than others. Is that the right assumption?
No, yeah, it's similar. Actually, the OEMs itself has grown sharply. Earlier, the dealers was a little stronger, but the owners started to grow. And I think there's a bit of factor in the last about maybe 18, 20. If you've seen the last 2.5 years, almost, 2 years, 9 months for the consumer group, it's continuously growing. It's not just been last quarter. If you take the previous year's financial and the year before that, the consumer group has grown continuously, actually. So it's still, as I said, I still feel we are at this phase of an early stage of digital advertising, and we're seeing this growth. It's been 2 years, 9 months, actually. It's continuously been growing, the consumer group. It's not a one-quarter thing. The sharp increase in this quarter, you've seen the margins, etc., is because of the leverage in the business. But the growth, if you see, this business has actually been continuously growing.
Got it. And how has been the performance in the offshore business? How are we looking at ramping up there?
Yeah, it's got stronger. We've got two sides of it now. We've got an offshore/signature outlets for Carvale, which is, I think, the 180 odd stores now. And we acquired OLX. We got another, I think, about 170, 180 stores there as well. So there are, if I'm not right, am I right, Anisha, about 375 to 400 such used car franchise stores now in the group. So it's become a very strong business model for both OLX and Carvale. I mean, it's, again, very early days, as I said, but it's become a reasonably strong business model for both.
Got it. And if I look at, again, the consumer overall growth, will it be fair to say that, digital advertisement overall industry would have grown in that space, or we would have gained probably some market share from some of the other digital segments like Facebook, Google's and all? So any sense you have there?
It will be both, I would think. I'll tell you what happens is when manufacturers are having a little more strain on selling vehicles, they tend to choose a little more direct form of advertising, which is us, we're very performance driven in a way. So if you spend money on Carvale or you list a car on Carvale, it is almost, you're directly catering to the most, I would say, serious customer or the most relevant customer. If you put money on, I don't know, Star Sports or Star TV or I don't know, Times of India or whatever, some newspaper, it's a little more brand kind of advertising. So when sales are strained, you tend to go to the more direct source for sales. I think that is one factor. The other factor you have to see, if you look at the traffic itself, I think we've gone from, if you look at Q3 last year, we were 38 million in the consumer group. We've gone to 49 million. So on a 38 million per month, we have gone to 49 million a month, which is a tremendous increase in consumer traffic itself, if you see. So I think these are the multiple factors we look at in the growth of Carvale.
Got it. So lastly, in slightly longer term now, like if you look at the annual numbers in the consumer business, we probably are closer to that 30-31% EBITDA margins, and OLX we are at close to 26-27%. So do you think over the longer term, the margin potential for both of these businesses will be similar, or any particular business where the potential of increase will be much higher compared to others? Any thoughts there?
No, we feel like these are typical businesses where the margins only go up with increase in revenue. We don't see any major cost escalation. and we don't see. So therefore, we see what we've said always, that with revenue increasing, margins will continue to grow. So these are early days for these companies or these businesses. As we grow in the next 1, 2, 3, 4 years, margins will continuously grow, and we'll get even better with our margins as they stand now. I think the consumer group is 35% today, so in last quarter, and it'll get even better as revenue grows.
Got it, sir. Thanks a lot. I'll come back in the queue.
Thank you. Thank you.
Thank you. The next question is from the line of Aman Sefi from iWealth Management. Please go ahead.
Hello, sir. I hope I'm audible.
Yes, we can hear you.
Thank you so much, sir, for the opportunity, and congrats on a super set of numbers. Sir, what I have noticed is that in your consumer business, what you have delivered the high growth of 38%.
Okay, I think we can't hear very clearly. I think it's smudging a bit.
Hello?
Yeah.
Yes, sir. So what I was noticing, sir, that in the passenger vehicle industry, the inventory levels were at the highest in October at 80 to 85 days. Then it went down to 65 days and further down in December month. So, sir, is it right to assume that your high growth which has been came in this quarter is due to high industry, high inventory level in this quarter?
I won't actually high industry level, inventory level. One is that, October, November, December tends to be, at least October, November tend to be high selling months anyway. So it does help us. But otherwise also, I think whether the inventory is, 3 months or 1 month or 6 months, generally, if wherever there's a supply, availability, I think we get better. So the inventory may not be high, but if there's supply available and dealers and manufacturers want to sell more vehicles, it's generally the more favorable market condition for us.
Understood, sir. So basically, if this inventory level is getting rationalized in the industry, so the contribution which has came from that particular, new OEM share in your consumer business will get down eventually, right?
No, I don't look at it that way. I feel like consumers come to buy vehicles on Cartrade. The inventory is one factor, but the reason consumers come is because they want to buy. So, it's many factors, I would say. The fact that the industry is growing, the fact that the markets are growing, the automotive markets are growing, the fact that inventory.
Hello, sir. You're not audible. Can you hear me? Mr. Sangi, can you hear me? Hello?
Hello?
Yes, Mr. Sangi. You weren't audible. Please go ahead.
Oh, sorry. Can you hear me now?
Yes.
Yes, sir, we can hear you. You lost in between, sir, where you were explaining about, the spend.
Yeah, I don't think the spend or the business has been related to 1 or 10 manufacturers having excessive inventory. That's the question. I think it's related to the fact that, people find they want to come to a platform like us. People find that you get the inventory they want here. They get the selection they want here. People also find that they want to buy cars in that month or two-wheelers in that month. So it's a multiple factor thing. It's not about high inventory. So that's the question.
I understood, sir. Thank you so much.
Thank you.
The next question is from the line of Nitish Jalan from Axis Capital. Please go ahead.
Yeah, hi Vinay. Thank you for taking the question and congrats on a good set of numbers. So see, I have 3 questions. First question on the consumer business. See, yes, I think you said rightly that when supply is higher than demand, it's very good for your business. So just wanted to understand, when this is a scenario, growth is coming more for in terms of your lead cost per vehicle you are charging higher to the dealers, your advertisement rates have gone up, or is it simply that more and more vehicles are getting sold through lead generation? So just wanted to understand the drivers of the growth here. How much is because of price?
It's actually all the above. One is the manufacturers spend more money. Second is, as I gave the figures a little earlier, the traffic itself is up substantially year on year in Carwale and Bikewale. I think the third is, platform selling obviously more vehicles. So all of it, I would say. It's not one of these things, it's all of them.
Okay, so there's nothing one or factor which is impacting more.
I think that thing, Nitish, that's one of the reasons we feel good about the business is because we don't think that there's a reason why very specific reason where we've seen this growth. As I said earlier, the consumer group business has grown over many quarters. It's not a one-off. And I think that's why we feel good about the business, because it's not a one-off. It's just been consistent growth over many quarters, actually.
Correct. So that's why I think the only factor here is the growth has picked up substantially. Yes, this business was growing earlier, but it was growing more in mid-teens earlier. But in the last couple of quarters, we have seen growth picking up substantially. So the idea is to understand what is the more sustainable growth, basically. That's what we have to understand. And obviously, there'll not be data available for this, but as per your experience or as per your understanding, right? What we understand, we know the advertisement budgets of the OEMs, or at least they tell us how it has grown, not grown, right? And it has not grown at 30% or 20% the way your top line has grown. So does that mean that these verticals, basically domain, car wale, car dekho, all these domains are getting more and more traffic now, or more and more share of OEM's wallet, or any sense around these numbers, or anything you can talk about as to any other structural changes that are happening, or these changes were supposed to happen anyways, but now I think looks like we are starting to see that pickup happening. So any sense on what is driving this, or exactly what is the wallet share now, where it can go in the next 3 years, 5 years?
Yeah, it is correct that one is OEM has spent more money. That's one. You may be right that OEM has not spent 30% more money. That is also correct, probably. But the reality is they are spending more money on digital. I think that change does take place when you want more direct results or very quick results. You spend money on digital or more measurable results. All this requires digital spend. So it would be, I mean, we don't have complete data yet for the last 3-4 months, but it would be correct to assume that some share would have been gained by platforms like Carwale or Bike Wale. It would be fair to assume. But it's also fair to assume that there is a slight shift in the pattern of OEM spending to digital. There's also part of it is that advertising expense for OEMs are growing. It's all those factors. The fact that share is growing is also true. I would again put it all the three factors that are actually taking place. You're seeing the first signs of all of this happening, actually.
Okay, that's a good thing to hear. Vinay, you were taking a lot of other initiatives also in the consumer business, lending through your portal, making a lending platform through your portal, or maybe some other things as well. Has any of these things started working out well, or started leading to some revenue generation for you guys?
It's not leading to significant revenue generation, but it's leading to traction. I think the first signs of something working is how consumers react to products like financing, for example. As you can see on our platform today, finance offers for new cars, new two-wheelers, used cars, etc., on Carwale, Bike Wale, even on OLX has gone live. And we find that, some of these are starting adopted by consumers, getting instant approval for a loan for a two-wheeler or a car. Some have scaled, especially in two-wheelers. We find the volumes pretty high. So these are all products for the future. But eventually, people like you and me, when we buy a car or a two-wheeler, definitely a two-wheeler, if not a car, will want a one-click-like experience. Click a button and get the bike home, right? It'll just come to your house. You'll want that kind of an experience. And obviously, a lot of these initiatives on our tech product side are trying to solve these problems for the future. Even if today consumers don't want it, maybe in a year, 2, 3, 4 years, they will want it, or some percentage of customers will want it. And that's what we're doing. We're building these products for ourselves, for bikes and cars. We're also building this, by the way, for OEMs. Many of the OEMs are using these products on their websites. I mean, today, many two-wheeler and car manufacturers are using some of the technologies we created for their own customers on their own websites and their own showrooms. So I think part of our role is also trying to get the entire industry digitized. And then, serving, it just helps serve all our customers better and give them a better experience. So many of those initiatives are going on in parallel. They may not become big monetization tools, immediately in the next 3-4 months or 6 months. But they're definitely ways of changing consumer behavior. And they're also improve consumer experience. And that's one of the reasons you see Carwale and Bike Wale's traffic, right, going up on a base of 39 million a month last year. To go up from there to 49 million, it's no mean achievement. I mean, it's a tremendous achievement to increase traffic by that scale over a 12-month period. It is these kind of initiatives which get more consumers to come. And you've got to remember, we are 95% organic. Still.
Yeah. No, I understand that. Okay, maybe I'll get into a separate discussion with you to discuss this in detail. Just one thing about which I have always been curious, right? Typically, if you look at in India, new car market is around 4.2 million. Maybe used car market is around 5 million, right? So there are about 8 to 10 million car buys and sales that happens, new car, used car combined put together. So when we see the traffic numbers coming out to be 38 million, 50 million, who are these people, right? If they're not
There are also two-wheelers here. But when you look at two-wheelers, the numbers go a little more. But even if you look at cars alone, if there are 10 million probably buyers for cars, there are probably 80 to 100 million looking for cars or shopping for cars, which may come, in the next 12 months, 16 months, whatever. And then there are another 4 or 5 million selling cars, right? So the multiple sections of this data, right, which come around. And then there are almost like 4 or 5 million, maybe many users who have cars who just come and understand about their own car or want to know more about their car. So traffic is got all sorts of people who own cars, people who are looking to buy new cars, used cars, people who are going to sell cars, all of them, right? Anybody who's trying to do this for the next 6 months or 12 months will be there. And you got to remember also, market share of Car Wale is very high to car users, right? Or car owners or car looking or aspiring car owners. It's very, very high, the market share.
Sure.
Very few people buying a car and not coming to one of our platforms. Very few people.
Correct. And the second question is on the used car side. I think when we bought OLX, Cartrade had an existing used car business as well. So have you integrated those businesses? Have you been able to offer a better deal to dealers, used car dealers, and charge higher subscription revenues from them? So any of these steps you have taken on the OLX side, because it's like essentially number one and number two player getting merged together, right, or becoming one. So what kind of benefits have you seen because of that, or any strategic steps you have taken to improve your positioning or to expand the size of the industry, basically, right? Basically, you are the one who has to create opportunities for monetization. So what have you done to do that?
We've got two used car businesses under Car Wale and under OLX. OLX is almost 3.5-4 times the size of Car Wale in the used car space. For Car Wale, 85% is new, 15% is used. For OLX, about 40-45% of its business is used cars. And it is 3 times the size of Car Wale. The customer profile, both platforms, by the way, get over 150 million customers a year. So both are strong. Both have independent brands. Customers go for different reasons to both. What we find in the data is generally we find that customers want to buy a car, let's say 7 to 8 lakhs and over, tend to come to Car Wale, a little more, I would say big city, little more, probably buying a little more expensive car. In OLX, you find very strong coverage across all cities in India, especially, B class, C class, D class towns in India. And the ticket sizes seems to be more 0 to 8 lakhs. So it's almost like Car Wale has very strong strength because it's such a new car platform on cars above 8 lakhs for used cars, and OLX is strong up to 8 lakhs. It's almost how they complement each other. Of course, there's overlap between the two as well. We find that dealers and consumers come for different reasons to both. As I said, OLX is 3.5 times the size. We find that dealers in OLX tend to advertise for cars or want to be there for all small towns, very, very strong coverage in small towns, and very, very strong coverage on cars up to 8 lakhs rupees. And Car Wale tends to be in the top 25 cities and up to 8 lakhs. So that's how it is. The question of merging, we thought originally whether we want one business rather than two. We find that people come for different reasons. The brands are strong. Dealers have different reasons to come. Consumers come for different reasons. What we tend to merge always, or tend to make it easy for people to do, is the back end. So if there's a dealer on OLX and Car Wale, can we give them one simple tool to upload cars on both platforms, right? Can we do things like that? And that's the work we've been working on the technology side, where the back end is one, but the front end for consumers and dealers are two, right? So you as a consumer can go to either platform, or you as a dealer can go to either platform. And I think that's how we tend to be running these businesses. We're still in the process of completing that. I think the first steps of that in this quarter, where we'll have some functions of our back-end systems common, right? So I think those are the kind of things we have a roadmap towards on the tech side and synergy side at this point.
Sure. And just one last question on a housekeeping question. If I look at Q3, this quarter's PPT, last year auction volumes in remarketing is a shade lower 300,000 units, and auction volume is around 45,000 something. But if I look at the last year's PPT, right, these numbers were much higher. Auction listing was 355,000 and auction volume was 51,000. So has there been any restatement in the last year numbers on the auction volumes and auction sales? Because
in Samil.
Yeah, in Samil. Because the numbers.
Restatement of anything. Anisha, anything, but I don't think the restatement of anything.
No. If you look at the footnote, we have clarified these are all vehicle auction listings.
No, I understand that because Anisha, if you look at auction listing in current year PPT for last year, you have given 299,712. But in the Q3 FY24 PPT, for Q3 FY24, the auction listing is 3,55,363. And similarly, the auction volume was 50,925. But in this year's PPT, last year number is 45,000 something. So there's a big difference.
Yes, which is what I was clarifying, Anisha. These are all vehicle auction listings. Previously, we had put all listings, which is why in the last couple of quarters, we have clearly called out only the vehicle auction listings.
Oh, okay. So you have removed some non-vehicle things from that, and that is the reason it is happening.
Yes.
Okay. Sure. Thanks.
Thank you.
Thank you. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead.
Hi.
Hi, Arpit.
Yeah, hi. Just superb results, super show. Just wanted to understand in terms of monetization, like given the strong platform that we have, be it on the used cars, also on the new cars, our monetization is little under leveraged, right? So you believe that we are at the J curve in terms of monetization and the revenue growth should be accelerating going ahead, given our position in used car and new cars? What is how do you think about it?
We believe we've had a 32% growth in revenues, right? So we believe the growth drivers are in place. 32% growth over 9 months. So we believe definitely the revenue drivers are in place. We also believe that there's a lot of potential in the industry itself. And most of that is around having more consumers coming to our platforms or having more dealers or more manufacturers on our platform, providing more services to our customers like loans, etc., etc. So yeah, of course, we believe at early stage the TAM is massive. The idea would be keep growing consumer experience as well as keep growing monetization with it. And that is why we're growing at 32%, right? So it's all of these things I'll give you, to be honest.
Got it. So you think these numbers, once all the steps that you have taken in the last couple of years and couple of quarters, this all initiatives now will translate for you from going from a 20% growth company to being a 30% growth company. Is that a thing that you are looking at?
We're not giving guidance. We don't think about that. But to be honest, if you see our growth rate in the first 9 months, right, which is what should be looked for, it's a 32% growth in the company, right, on a consolidated basis. Of course, the consumer group will maybe at 27%, in different growth rates. But at the company, we've grown 32%. So, our attempt is to obviously serve our consumers better, grow as fast as we can, but growth based on profitable growth, right, which is keep improving our margins as we grow. That's how we tend to be as an organization. And that's how the last few quarters have demonstrated our thought process around some of these things.
Got it. So let's say now you are at 176 crores kind of a revenue run rate, 180 crores kind of a revenue run rate, at least for the third quarter. You think this run rate, let's say, will move to 220, 230 crores maybe by next year, and that's how we go on to become 1,000 crore revenue company where your costs would not escalate, but your margins will just keep accelerating, keep going ahead? How should you look at these costs going ahead once the revenue growth keeps coming in, let's say 25-30%?
Okay. I can't obviously give guidance for next year's revenue, but what you're saying is correct, is that if our revenue is to grow, our costs should not increase in relation to that. We always say that our costs grow marginally, but in compared to our revenue growth. If we did add some quantum of revenue to our current revenue, a large part of that will go to profit. And this has been demonstrated now over 5-6 quarters.
Yes.
This is not a one quarter. It's been continuously happening. So you can see the margins quarter by quarter for the last 4 quarters, and you'll see that's true.
Got it. Just one last question on OLX.
Sure.
So on OLX, what steps are we taking to fire up the non-auto side of the business? Like what are the things that we have been doing on the back end, and when should we start seeing great results on the non-auto side of the business?
Yeah, so the non-auto side, there are different segments. There's real estate, to mobile phones, to bikes, to electronics, household items, jobs, etc., etc. In each of these, we're working a lot on the product side to see what the offering for the consumer is. What changes we need to make on the front-end platform? How do we keep the back-end tech? How do we get more consumers to pay? How do we get more businesses to pay? How do we enhance experience for them? How do we launch products for them which enhance the experience? All of that is going on. Actually, we've been working on for the last year. It takes a little bit of time to make, such product changes. And some of it is, coming in, some of it is still happening. But we do hope, we're very excited with the non-auto side. So tremendous potential. It's probably the largest platform for bikes, mobile phones, electronics, household items. All of these, OLX probably has very, very strong dominance in India. If you're selling an old phone or an old washing machine, if you didn't put on OLX, how would you sell it? And I think that's the strength of the platform. It has very, very high dominance. So there's probably no other way in India to sell it outside OLX, either on a C2C basis or sell it to a dealer, or if you wanted to buy one similarly, how would you buy it? How would you find a used washing machine, except if it was on OLX? So there's tremendous, potential here. It's early days for us, as I said. It should provide growth for us for the next 10 years. It's not a 1 quarter, 2 quarter story. This is probably a 10-year story or a 20-year story.
Got it. But do you think our expenses now will grow in line with inflation, or there will be still some growth on that? Because I think
we may not be inflation, but we see minimal incremental cost. If you see our cost even this year, the cost increase in a standard account is almost zero. So we don't see much reason across the group for cost increase. I mean, there will be increments. There will be some additions of manpower. First of all, the only real massive cost we have is manpower cost. So there'll be an increment factor, and there will be probably some addition of some people. But generally, our costs are, not likely to go up significantly in the future.
Got it. And the OLX business, you think that this business from a 50 crore run rate can move to, let's say, 100, 150 crore run rate maybe in the next couple of years? So that is a big optionality the group owns right now, and that needs to be leveraged going ahead.
I don't want to put a number, but there's limitless potential in OLX. There's absolutely limitless potential. I don't want to put a number to it, but there is. We've just barely started, working on it. So I not said 2-3 years. I think for 10 years we can have growth.
Sure. Thank you.
Thank you. The next question is from the line of Harshit Nagpal from Yes Securities. Please go ahead.
Yeah. Good afternoon, sir. Am I audible?
Hi, Harshit.
Hi. So one, if you could provide the breakdown for the remarketing business for this quarter's revenue between Shriram, Android, and Cartrade.
Anisha, you want to do that? Take this up. I think it must be the different companies.
Yeah, there are 3 different legal entities. Just give me a second.
Yeah. Do we file that with the?
No, that's what I was just saying. We don't. We're not published this in the public domain yet.
I understand.
Right. Okay. And if you could give me the user breakup for the rural, urban, and semi-urban for both Carvale and OLX, if that is possible, like the amount of users we have.
We won't have those numbers. The user numbers we said. That's the traffic numbers, right?
Yeah.
No, we won't have that. We try and keep it, but we don't have it today available with us.
Okay. And the advertisement revenue from the OEMs and the dealers, the split between that, if you would have it for the Carvale.
Yeah, that's it. That Anisha said, but 65-35. I think 65 OEMs and 35 dealers in Carvale and Bikewale.
So 65 OEMs, it's mostly advertisement revenue, right?
It tends to be mostly either advertisement or leads or it's not advertising is not the way we call advertising is not just display advertising, but it's also leads, or it could even be, we are deeply integrated with manufacturers now, so it could even be transaction in some cases.
Right. Thank you. Thanks, sir.
Thank you.
The next question is from the line of Siddharth Purohit from InvesQ Investment Advisors Private Limited. Please go ahead.
Hello. Yeah. Hi, sir. Most of my question has been answered. Just 2 clarifications. So what would be our run rate of ESOP at the consolidated level? Or if you can give it.
Yeah, the ESOP second, is it broken up here, Anisha? You can just give it. It's in a standalone. It is down by 37% to 2.79 crores a quarter. Is that correct, Anisha?
Yes, sir.
That's correct.
So it will not be equally divided between the 2 entities, right?
No. It's in the respective decks. Each of the entities is displayed separately. So the standalone reflects the consumer group, which was when I called out the 2.79 crores.
That is a quarterly run rate you are saying?
Yes.
That's a quarterly, and it's 8.36 crores for 3 months.
For 9 months.
For 9 months, sorry. Which is down 37% from last year.
So any specific, reason why it was lower this quarter? Or maybe it was not very.
It's the way it is. It's the way it is. A lot of the ESOP's cost is related to stock issued, earlier 2-3 years ago. And as the company, as it vests, the costs keep coming down. So it's likely to keep coming down. If the question is, it's likely to keep coming down even next year.
Okay, fine. And one more thing on the this auction side, if I say look at the realizations per auction, is it seasonally it is higher during this quarter, or it is because of the product mix or the sales mix?
Yeah, I think it's it is a little bit. Normally Q3 is better than Q2 anyway, but it is also because of the repossession volume, because it's much higher than last year as well, same time. So the right way to look at it is 28% year on year, right? Same period last year. So it can't be seasonal. It is also because of volume increase due to a little bit more repossession in the quarter.
Okay, got it. Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Asta from PKD Advisors. Please go ahead.
Hello. Hi, sir. I have a few questions. My first question is to start with. So you said that whenever our revenue increases, and so that is directly going to impact that's directly going to hit our bottom line, right? So that is across all the 3 segments, right? OLX, consumer, and remarketing?
That is correct. Absolutely correct.
Okay. My second question would be, sir, what would be the steady-state EBITDA margins you expect for the consumer business? The current margins, can we consider that as a stable one?
We actually think that as revenue increases should go up. So I don't know what steady means, but we actually think it should go up as revenue goes up. If revenue did come down, it would come down too. But if revenue went up, it would go up.
Okay. So, sir, currently we were at approximately 30 approximately, right? EBITDA margins for
35,
yeah, 35. Correct. So, if the revenue goes up, so we are expecting those margins.
It should go up. Yes, the margin should go up. We feel the other way around actually.
Got it. So my third question is related to the remarketing segment. Sir, what happened in this quarter exactly? Is it growth because merely because last year quarter was so softened, or something fundamentally has changed in the industry level?
I think it's both. We did have a weak previous year where the growth was minimal in the remarketing business, so there was a base effect there. But there is, as I said, some signs of repossession improving or increasing, and us getting more vehicles from that segment. So it's both, I would think. But we did have a previous year which was also weak, so it's a combination of both factors, I would say.
Got it. So my last question would be, what is the right to win in this remarketing segment, and who are we competing with exactly?
So the second part is who we compete. We are generally competing with a very offline methodology of sales. So if a bank or an NBFC or an individual didn't sell vehicles in an auction format, a digital auction format, they would sell it offline directly, and that's probably the competition for us is offline sales. What is the right to win is a very good question. It's a marketplace. So there are thousands and thousands of dealers which bid for inventory coming from consumers or businesses. 40% of our business or the supply which comes is single inventory, which is what we call retail, which means each individual vehicle comes there and is sold to thousands of dealers bidding for it. So it's an online digital marketplace, which is by itself a right to win, because you have dealers coming because there are sellers or consumers or businesses selling, and sellers come because there are businesses buying. It's a C2B, B2B business. That's one. So there's a network effects there which feeds off each other. And I said these dealers are thousands. There's no single buyer would buy more than 0.5% on our platform. So it's a very, very large number of buyers which buy this inventory. We're probably the largest supplier of inventory to dealers in India, number one. Number two, there's a tremendous amount of physical infrastructure at Shriram Auto Mall. That's one of the reasons we acquired the company. We have 130 physical locations, or auto malls as we call, each of them in the minimum of 5-acre properties, where we keep vehicles which are for sale. So if you're a bank or an NBFC and you want to sell your vehicles, you can physically keep it with us. and then we can do a digital sale for you. So I think it's a combination. That also the differentiation in India. So it's a phygital business, mostly digital, but all these factors of network effects, marketplace dynamics, physical infrastructure, skill and technology and product are factors why we have a right to win.
Got it. Got it, sir. That's it from my end. Thank you.
The next question is from the line of Vijit Jain from Citibank. Please go ahead.
Great. Thank you so much for the opportunity again. Vinay, earlier in this call, you described your business to OEMs as, performance market.
I think we lost Vijit. Hello?
Yes, I think we have lost Vijit.
Vijit, yeah.
Okay. Right. So, ladies and gentlemen, that brings us to the last question for today. I would now like to hand the conference over to the management for the closing comments.
Thank you everybody for joining in today and taking this time out. We feel excited about the last quarter, and we also feel excited about the future of the company. So thank you once again and look forward to hearing from you again soon. Thank you. Bye.
Thank you, ladies and gentlemen. On behalf of Cartrade Tech Limited, that concludes this conference. You may now disconnect your lines.